Thank you for joining us today. Bienvenue. There are about 300 people have registered this morning, and we're very pleased that everyone could join this webinar. This webinar is called The New Frontier, Investing, Sustainability, and Value Added, and it's presented by our sponsor, Protein Industries Canada. My name is Rory McAlpine. I'm a board member of the Canadian Agri-Food Policy Institute. I recently retired from Maple Leaf Foods, and this topic of investing and sustainability and value added is something that Maple Leaf is certainly very engaged in. So I'm pleased to be your moderator today. CAPI is an independent think tank, a policy think tank focused solely on the agri-food sector, bringing insight, evidence, and creative solutions to agri-food policymakers by creating venues for critical conversations, explaining research results to a broader audience, and being a connector between those who have creative ideas to contribute and those who are making impactful policy decisions. This is the first of many webinars for 2021 from CAPI as part of our research program this year. And we encourage you to join our mailing list and follow us on social media to stay apprised of upcoming CAPI research and events. Now, another great way to be involved with CAPI is to become a partner or supporter of the work accomplished through our registered charity, the Canadian Agri-Food Foundation, which supports the work of CAPI. Your commitment is vital, as it is urgent to intensify our efforts, as agriculture and agri-food can be essential solution providers for the economy, environment, health, food, and global security. But creative policy changes are essential. Connect through the info email located at the bottom right of the screen. Now, as always, there's a few housekeeping issues to be aware of. Firstly, during the webinar, participant audio and video will be turned off. As an attendee, you cannot be seen or heard by others. Participants can submit questions by clicking on the Q&A button at the bottom of the screen. Due to time limits, the moderator, myself, may not be able to ask all questions submitted, but we'll try to protect about 30 minutes at the end to allow for Q&A. The webinar is being recorded and will be shared with all participants and posted to our YouTube channel. And if you are posting about the webinar on social media, please use the hashtag #TheNewFrontier. So we have a fantastic panel of experts today to discuss today's efforts to boost value added and sustainability in the agri-food system, the availability and quality of natural and human capital, regulatory barriers, and other factors for investment attractiveness. First, though, I'd like to invite Bill Greuel, who's the Chief Executive Officer of Protein Industries Canada, the leading supercluster organization for agri-food, and our sponsor for the webinar, to say a few words. Over to you, Bill.
Thanks, Rory. You know, there's a lot of important conversations happening today in the agri-food sector, but I think few are as important as exploring this nexus between capital investment and environmental sustainability. Now, the concept of green growth is really important to our industry. And I'm very fortunate as the CEO of an innovation supercluster. I get to have conversations about the future of agriculture with a wide swath of stakeholders, people representing the entire value chain. And when I talk to our SME members, those trailblazers, those companies that are developing new innovation, new technologies, new products, and new services about what's holding their business back, conversation frequently winds its way to a discussion around access to capital. And when I talk to consumer packaged goods companies and major ingredient manufacturers, companies like Givaudan and Christian Hansen, Ingredion, Mars, and PepsiCo, the conversation is largely about the environmental sustainability of ingredients. And there is increasing interest in Canada as a supplier of those environmentally sustainable ingredients. It makes this topic critical for the growth of the sector. At Protein Industries Canada, we're working to create the conditions that will allow Canadian companies to take a sizable portion of the global plant protein market, a market that within 2 decades could be measured in the hundreds of billions of dollars. And the capital we need to achieve that is measured in the billions. And we need to do this all under the umbrella of green growth, and we need to do this in an environmentally sustainable manner. And that's why Protein Industries Canada is pleased to sponsor this event today and to work with the Canadian Agri-Food Policy Institute to bring these important conversations to the forefront. I'm very excited about the future of plant-based foods and the future of Canada's agri-food sector. And that's why this panel is, why I'm excited to hear what this panel has to say. So thanks, Rory, and I look forward to the discussion today.
Well, thank you, Bill. So let's get going. For the webinar this morning, we have 4 excellent expert speakers. Firstly, John Kelly, Deputy Minister of the Ontario Ministry of Agriculture, Food and Rural Affairs, will speak. John is only about 6 months into his new role, but comes to that role with tremendous background in the agri-food sector in a variety of roles. Then we're going to hear from Dominique Baumann, who is the CEO of Roquette in Canada. I'm really looking forward to hearing from Dominique because Roquette has made a very significant new investment in plant protein processing in Manitoba and has some firsthand experience of investment. Next, we're going to hear from Patrick Lemelin, Vice-President of Agriculture and Agri-Food at Banque Nationale, National Bank of Canada, who has a tremendous background in agriculture and financing the capital needs of the sector. And finally, Michael Hofford, who's the CEO of Farm Credit Canada, long time with Farm Credit, and now the CEO with more insight into what his clients are saying, I'm sure. So without any further ado, I'm going to pass it over to our first speaker, Deputy Minister John Kelly.
Thanks, Rory. I appreciate that. And bonjour à tous, bienvenue. When I was asked to speak here, I was delighted. I was delighted to speak about the role that government can play and encourage value-added food processing and also its sustainability. Before I joined AMAFRA, I had the good fortune of spending about 25 years in leadership positions in the ag, food, life sciences sectors, and in the private and the public sectors as well as not-for-profit. So it's really cool to be here. Sustainability is really a broad term, often encompassing economic profitability, environmental stewardship, and social responsibility. But these terms themselves are quite broad. So I'm going to give you an explanation of what my view on sustainability really is to me. It really is a farm to fork opportunity, something that everyone should look forward to, whether it's through best management practices or adopting new technology on the farm, or even in processing technologies. It's also about economic resilience. I always say that a farmer who is not a business person first won't be a farmer very long. So it's all about a better way of doing business with both economic and environmental benefits, but also having those positive social outcomes. It's also a skills and workforce opportunity. So we can advance sustainability with high-tech solutions and best practices, and this takes trained people and often at the leading edge of technology. The government does have a role in playing in investment in the food processing sector. We know that it's a significant source of jobs and economic activity, and not just in that part of the sector, but across the entire value chain. We have to look across the entire value chain and the supply of food with this perspective. Maintaining and growing our food processing sector in Ontario is a priority for our government. And some of the things that governments can do to encourage investment and sustainability include things like working and engaging with other governments to foster, reliable trading partnerships and to reduce barriers for exporters. We can provide useful information to businesses and consumers and really facilitate those interactions between businesses such as buyers and suppliers, investors, all with the lens to increase opportunities. funding of research and technology transfer programs to help the sector adopt new technologies and techniques to really help them remain competitive, as well as the development of funding within the sector, and also reducing the regulatory burden and working with other government partners to help the sector thrive, such as preventing labor shortages or even lowering taxes. Our government actively works with the federal government and industry to foster reliable trading relationships. And this is really crucial. We have to have a stable political environment if we're going to look at attracting foreign direct investment, and also to giving businesses the confidence they need to make longer term investments. You all know our most important trading partner is the United States, and it accounts for most of our exports from Ontario. With access to these large markets in the US, Canadian businesses often first export their products to our southern neighbor and then expand their exports elsewhere. We've heard about recent protectionist initiatives that are in the US, and they are concerning. And what it shows is that having a trade agreement in place does not always guarantee a stable trading relationship or continued market access. There are examples like there's a seasonal produce trade investigation that was launched by the US that could eventually lead to tariffs on Canadian exports to the US. Ontario is really engaged with the federal government and industry on these investigations. And one of the investigations relates to bell peppers. Ontario is contributing to the costs of advocating for Canada and the sector's interests. We also engage with the US and Mexico and government officials through the annual Tri-National Agricultural Accord, where many of these things are discussed. In discussions with US officials, we like to communicate that we do have a good trading relationship and that the trade between the countries is mutually beneficial. It greatly benefits the US as much as it does Canada. We are hopeful that the new administration will be less volatile, and if the Buy America and some other protection measures continue, we hope to mitigate those. So we also like to be able to provide information and facilitate interactions between businesses. We actively support economic growth across Ontario's agri-food value chain. And this is through the provision of things like information, resources, programming, as well as the attempts to make direct business connections with buyers, suppliers, and investors. These help increase our sector resilience and competitiveness. It can help navigate operational and export barriers with the ultimate goal to boosting trade. Another example would be our information sharing that we do with consumers through the Ontario Foodland logo. It's one of the most recognized logos you'll see. And the brand helps consumers find those local foods that they want to buy, including those so that they can support local sustainability, buy local and to support sustainability. We have information sharing across businesses. There's a program that we have called our OMA for Profit program. And this is all about providing information to food and beverage exporters about how to actually export to the United States. And this includes things like export financing, product labeling, US tax laws, food brokerage, food distribution, food and drug regulations, and also things like customs and customs brokerage. We continue to work with food and beverage companies to establish these priorities. We also want to hear more from the sector and what the sector sees as Ontario's advantages and the way that Ontario can be more competitive. So we're always looking for input. Now, you all know that we're going through a tremendous difficulty with the COVID-19 pandemic. And Minister Hardeman, who is a really fantastic agricultural and food minister for Ontario, created an advisory council to make sure that industry's views were heard, and they do help guide our ministry's response, including advocating with other ministries like health, like labor, and others, and governments that so that they actually know the importance of farm labor and the farm practices, and that food processing is also extremely important. And this is in regards to things like testing, response to the COVID-19 pandemic, and also things like vaccine prioritization. So we are grappling with this. It's not easy, but we are working with governments to support industry resiliency. We know that the agri-food processing sector itself is an essential part of our economy, and it's shown itself to be very resilient despite just great challenges that they've had. As we emerge from this pandemic, there's going to be a renewed focus on continually improving resiliency and sustainability. We'll do this in a number of ways. One of the ways is creation of new research and technology transfer. We do this by several investments. We've invested over $60 million into research innovation, including areas such as sustainability. Our funding helps build capacity in the agri-food sector in core areas of economic development, protection and assurance, and stewardship. To accelerate the transformation of this knowledge research use, OMAFRA uses a demand-driven research scheme that can be used in a timely and effective manner. We also invested $7 million in annual funding to support commercialization and innovation in the agri-food sector. And this supports programs and organizations like the Ontario Agri-Food Research Initiative. The University of Guelph has a really cool program called the Griffin's Lair program. We support the Vineland Research and Innovation Center, the Livestock Research and Innovation Corporation as well. And in 2019, we also relaunched our strategic sector support. It's a cost share program under the Place to Grow Funding for Sectors banner. And this is done under the Canadian Agriculture Partnership, our agreement with the feds. And we catalyze partnerships across the supply chain to advance priority activities. And this includes advanced research, pilot projects, demonstrations, and they have significant focus areas that we go to. And they are seeking to drive results, with many broad benefits, including public good elements, environmental sustainability, food safety and traceability, and animal health and welfare. On the economic development front, we're also supporting the increase of the competitiveness of the broader agri-food and agri-food sector in Ontario through piloting and demonstrating technology and equipment that is new and innovative for the agri-food sector. There's also an enhanced focus on Northern Ontario and Indigenous partner businesses. We support regional incubators and commercialization centers in order to enable startups and scale up of agri-food and agri-food products companies, ultimately helping these companies commercialize and launch themselves and look to grow. There are some things, though, that we have to work with because we are a government. Governments can do lots of things to support the sector, and we should encourage businesses and consumers to act in more sustainable ways because society really benefits from economic resilience, environmental stewardship, and positive social outcomes. But governments are also in a difficult position of trying to increase these positive outcomes by encouraging or discouraging behaviors. And this may require the government to use funds or restrictions on business activities. We have to use taxpayer dollars wisely and not create unnecessary restrictions on trade and business. When necessary, we do incorporate sustainability requirements into laws, such as environmental regulations, and provide information to help individuals as they move forward. Sorry, my computer is just going to go to sleep on me. Okay. So we're all about the development of best practices regarding sustainability, and they do continue to evolve. We have to be able to adapt and encourage those best practices and ensure that the laws and policies also reflect the best science. As consumer trends, technology, and global trade continue to change, government needs to regularly examine and update their efforts. We are certainly looking to improve the climate for businesses, and it's an area of focus for us in Ontario. Things like lowering the small business tax rate and reducing workplace insurance premium rates are two examples of how we're doing this. It helps businesses with their cash flow, and it also helps them to build. We've taken more than 200 actions to reduce regulatory burdens or red tape. And to that end, we're trying to create the right conditions for investment and prosperity. The Ontario government has established Invest Ontario, and this is to position Ontario as a top-tier destination for business investment. We have an initial focus on advanced manufacturing, life sciences, and technologies, but you know that the agri-food sector is right there. This agency will provide investors with customized tools and services that will support them to invest in Ontario and leverage the many benefits that Ontario has. Our goal is to make it easier, really, to do business in Ontario. So to conclude, I guess, I want you to think of government as a partner with industry in working to achieve your goals. We are looking at providing a stable business climate with the appropriate environmental regulations, balancing competing interests to benefit society. You know, at OMAFRA, we rely on, and as I said, we always welcome input from sector representatives and other stakeholders. We're really proud of what we do and what Ontario's story is, and we're always looking for additional ways to expand it and to tell our story. So with that, Rory, thanks very much, and happy to pass it back to you.
Okay, thank you very much, John. Appreciate that. So look, let's now switch to the real world of investing and exporting. Just before we hear from Dominique, Edmund, can you put up the 2 slides just to give us a bit of a grounding in some current data? The first slide that Edmund can show is the current data on capital expenditures in food and beverage processing from 2009 to 2020 in Canada. You may know that CAPI has had a focus on this going back 10 years and updated the data just a couple of years ago, or in 2019, and that report is available for anybody who's interested. But I think this helps us understand where we've been. I mean, you see a very kind of flatline scenario of capital investment in Canada, that, you know, both direct and mergers and acquisitions investment, and then a good increase in 2018, 2019, and then the signs of a dip in 2020. This, of course, is crucial to the future capacity and competitiveness of the industry. I think a lot of us are quite worried about what the future portends now with new trade problems, with obviously the impact of COVID, rising currency. And so this context of investment and how it will impact the ability of this sector to achieve the export goals set out by the Agri-Food Economic Strategy table is quite important. And then the next slide is just to show the issue of trade deficit or balance of trade in value-added food and beverage products. So the dotted line shows exports going back to 2000. The more solid line shows imports, and then the trade deficit across the bottom. So, you know, we were very worried at CAPI, did a lot of work on how badly the trade deficit had grown, you know, by 2014. We're starting to see a little bit of recovery, but still, the issue is how do we sustain a more balanced opportunity to grow exports and compete, not just internationally, but in our domestic market against imported value-added foods and beverage products. So anyway, let's now hear from Dominique, because he can tell us firsthand what that real world looks like for a new plant being built in Manitoba with some important export goals. Dominique, over to you. I think, Dominique, you're on mute.
Hello.
Yep,
yeah, can you hear me?
Yeah, that's great.
All right. Yeah. Good morning. Bonjour, everybody. My name is Dominique Baumann, and I'm with Rocket. I've been with Rocket about 35 years. And who is Rocket? So Rocket is a family-owned company, and what we're doing is we're working with our customers and partners to create new ingredients for the food and pharma industry. And our goal is to develop ingredients to better feed and cure people around the world. The company was started by two brothers, and the name of the company is the name of the family is the Rocket Brothers in 1933. We're a global company, and currently I'm CEO of Rocket Canada, but I worked before in Europe, in the US, and also in Asia. And 2019, I moved to Canada. I moved to Manitoba to lead the portage pea plant protein which we have started. Okay, so hold on. Okay, yeah, I thought I had my video in, so that's why. So yeah, so I moved to Canada to lead the construction of the largest plant-based protein in the world, and using raw materials, using pea as raw material. And this plant is located in Portage. Like I said, we are in startup mode, and we are going to use about 125,000 tons of peas per year. And we have about 120 employees. Investment is large. It's more than $600 million, and it was all funded by the Rocket family. So I'm going to share some experience. You know, I worked around the world and moved to Canada to lead this project. And so why did we pick Canada? First, Canada is a safe place to do business. You know, it's from an ethical and also democratic standpoint. Why Manitoba? So our raw materials are peas. So we wanted to be close to our raw materials. And Manitoba is a big producer of peas, and we have been very well received by the farmers. At first, we thought that, you know, only about 30% of our peas would come from Manitoba, the rest from Saskatchewan. But actually, right now, 70% of the peas are coming from Manitoba. So the farmers are ready to grow peas because they see all the value added we are bringing to the industry. Second, you know, to purify the protein, we're using water. And to separate all the components of the peas, we are using electricity. So we need ample supply of water and ample supply of electricity, which we have in Manitoba. And one more, you know, advantage of Manitoba is most of the power is from hydroelectric. So it's hydroelectric power, which is very sustainable, because our goal is to produce sustainable pea protein. Then once you make the products, you know, we need to ship the products, and Manitoba is very well positioned. You know, it's in the middle of Canada, so we can go in Canada east and west, but also most of the production will go south to the US, and some of the production will go to Asia. And you know, Portage is on Highway 1, and there are also very good rail connections to go to Asia. So logistically, Manitoba is very well positioned. Finally, we also, you know, we have 120 people. This plant is highly automated. We are really developing this plant-based protein sector, and it's using new technologies. So we need highly skilled employees, and we were able to achieve this in Manitoba. I have to say that I was worried when I first moved to Manitoba to lead the creation of this plant and the creation of the team, but we found out that we were able to hire the people with the right skills. So it's really good news. Some challenges, you know. Really, plant-based protein is a great opportunity, not only for Canada, but also for Manitoba. I think Manitoba can be the Silicon Valley of plant-based protein. There's a lot of advantages, like I mentioned, but there are some hurdles. Are they fixable? Yes. And I'm going to give you some examples. We're talking about innovation. So one hurdle we faced, or we're still facing for some products, is a CAPI approval of new products. We are new in this sector, you know. We're developing plant-based proteins, but with plant-based protein comes some co-products. So despite the fact that these co-products are already commercialized in France, because we have also a pea plant in France, it took us forever to get CAPI to approve some of these co-products. So that's something which needs to be fixed. We're talking about innovation. It's a new sector. You know, we're building, we're creating, we're part of a revolution for the food industry. And we're gonna have new products. We are pushing new products, so the regulatory side, the approval of the new products needs to be faster. So we could have, you know, a dedicated funnel system, especially which approves the products, the innovation products faster, especially if these products are already commercialized in other countries, especially Europe or US. Then something which was very, very new for me is Canada is more like a bunch of little countries, you know, under one country. So when I say that all the provinces are very, very have different regulations. So if I compare to Europe, you know, you manufacture a product in Germany, the European standards apply, and you can sell this product in France, Italy, I mean, it used to be UK, not anymore, Northern Europe, anywhere in Europe. It's not the case in Canada. Each province is different. Even, you know, an engineer in Quebec has to take a temporary license to stamp drawings in Manitoba. For me, it's crazy because I think a Canadian engineer, you know, regardless from where he got his degree or her degree, it doesn't matter. It's the same degree. So it should be easier for engineers to work across Canada. Same goes for some of the codes. You know, the building codes are different from each province, which creates hurdles to invest. Okay, in Canada. Pressure piping standards are different from one province to another. So really, I have plenty of examples because we built this plant. It's a big plant, and we had to, you know, go across Canada to get supplies, equipment, engineers, and labor. So this is another example. I think this should be easy to fix. Something to do. Subsidies, sometimes there are government subsidies, sometimes very complicated to navigate the subsidies and the processes. It takes a lot of resources. Now, once you have it, it's okay, but it takes resources. And I hear from some of other companies that, you know, that just give up because it's too complicated, especially smaller companies, startups. You know, it costs money and it's complicated. Another example is, you know, equipment. So now I'm going outside Canada. $600 million is a big investment. Some equipment we cannot find in Canada. So we had to go to Europe. We had to go to the US. And here we're facing the fact that, you know, there are rarely equivalencies between CSA and CE, UL. So and we have to recertify CSA some of the equipment. So I would think to attract more industries, to build more plants in Canada, we need to streamline this process and have equivalencies. If an equipment is made in Europe and is CE approved, or in the US, if they have the certification from these countries, it should be equivalent to CSA, and you don't have to do the CSA, spend time and money, and delay the project. So that's another example where Canada needs to streamline its processes, not only within Canada, but also to help to build plants with new technologies and bring these new technologies in Canada. That's basically the feedback I would have. There's one thing which we are watching is the CO2 tax. We're discovering it's complicated. it could create a handicap for us here in Canada compared to companies in the US, where there is no CO2 tax. And frankly, our competitors for plant-based protein, especially pea protein, are in the US, and they're also in China. So we need to, we are obviously looking into this, we're navigating this and learning about this carbon tax. So I think, you know, a solution could be more proactive consultation and consideration with new industries, because we're gonna have, the goal is to attract in Canada, new industries, new technology. I mentioned Silicon Valley of plant-based protein. I'm not joking. I think Manitoba and Canada has everything to be successful and be the world leader in plant-based protein. And not only making protein, but also using the co-products and building an ecosystem and a circular economy, which will make Canada much more successful.
Okay, merci. Thank you, Dominique. You've given us lots of good things to think about, and I'm sure there'll be some follow-up questions. Okay, so let's now go to the two bankers or financial experts in this story of investment and sustainability and adding value. So I'm going to turn it over to Patrick from National Bank.
Well, thanks, thanks, Rory. Good morning, everyone. Bonjour à tous. So, yeah, interesting topic to talk about growth, increased added value, and sustainability. And so we'll be sharing some views. We got the banker's view on these topics. So, and it was very interesting to hear Dominique to talk about you know, his view on that, and to hear that you know, Western is becoming the new Silicon Valley on the protein side. So quite interesting. So I'll be start by sharing some views on the how we see the context and the environment from an availability of capital and senior debt and financial performance as well. So is the context to us favorable, you know, for this growth, for this increase of added value and developing the industry, both agriculture and agri-food, to you know, to sustainability? Pat, the answer, I would say I'm pretty sure that Michael will concur that as well, but it's that very favorable environment as we speak in order to support this expansion. So both on availability on the regular debt, on capital in the market, and the situation of the industry, financial situation and the industry as well. So it was interesting when you shared the graph on the investment in the food and beverage and the agri-food sector. So actually we run each year, multiple times a year, some survey, you know, among all the companies, and one of the results we lately got, it's the intention investment and developing and hiring additional employees are very strong. Actually, it's way over the average in the last 5 years. So this is turning into concrete project that we see. So agri-food sector is very active as we speak, with many projects that they are underway and many projects that they are being planned, you know, next couple years. We see as well some sectors that have been a bit smaller, such as protein, vegetable protein, for example. So we see some great level of activities into that. So it's a response to some trend from the market we have. So very active. So what we can observe on the financial health, or how the agri-food sector is performing. So as for COVID-19 crisis, you know, has impacted the industry. 1 year ago, we were almost 1 year ago when that crisis started. We were a bit concerned about how the agri-food industry would come out of this crisis. We heard some logistic challenges since the beginning. But after close to a year, I would say that demand has been pretty stable, even moving up at some point. The industry has been resilient, so we're in a good situation with respect to the industry. I like to call the agriculture and the agri-food industry a kind of a steady Eddie economy, so which is not surely but slowly growing. So, and we got a good example of that in the actual crisis. So we see an agri-food sector as a healthy one as we speak. When we look into the financial metrics, the whole industry is performing well. Actually, I would say in a bit better shape than it was before the crisis. So it might be a bit surprising. So, but the industry was able to take advantage of the numerous support programs from both federal and province government. Stimulus on the interest rate as well is helping a lot. So today, as we speak, profits are correct or good, and sales are moving up, and it's even reflect on the working capital standpoint. So we see a decrease in the use of credit line while we're getting some profits and some growing of sales. So it's a good environment for growth, developing and investing, and financial institution all across the board in Canada, they got a great appetite for the sector as well. So I'm in the banking industry for now 25 years, and I would say that what we see in the market with respect to finance package to the business in the agri-food sector and structural leverage, etc. So we are in a era. It's very flexible. It's very liberal on the way to support the businesses. So it shows how confident financial institutions are with these sectors, and that confidence has been boosted during the crisis. When a sector is going through a crisis pretty well. So there's cash in the market. There's availability to support these expansion, and even in the venture cap world, so we see important expansion on the number of venture cap fund. National Bank, we launched a new one recently, and if you talk to most of these venture cap funds, they're gonna tell you that agri-food is a very interesting and attractive sector for them. So there's money in the market. And businesses in agri-food and agriculture, but mainly in agri-food, are in very good situations. So I will say that the macroeconomic environment is good to support that expansion. When we're talking about sustainability, so just to give you some color and ESG and banking, how we see that trend, and how it we foresee that will be reflecting into food and beverage and agriculture industry. So obviously it's a very important trend. So financial institutions, banks are adjusting their lending policies in order to be a bit more active, to stimulate a bit more, companies that they are doing well with respect to the old ESG environment, and some of them, like us, even took commitments, with the shareholders, with the market as well, that we would increase a lot, the proportion of the renewable energy portfolio. So there's a lot of effort in that direction, and even for a bank like us, the E in the ESG, we will be moving into a brand new head office next year, and we paid a lot of attention, put a lot of energy to reduce the footprint in the environment. So it's showing you, like public companies, even financial companies, are aligning their governance and their strategy around that. On the investment market, it's interesting to see that both institutional investors and domestic investors as well are switching into these type of assets, you know, are more concerned about investing in companies, public companies, that they are doing well with respect to ESG. And we did some study at the bank, you know, around that that trend, or that wave, I should say, and we interest ourselves about what is driving this ESG investment. So you might be surprised to hear that companies that they are doing well, public companies that they are doing well with respect to ESG, are performing better than the ones that they're doing a bit less well, I would say. So there's not just a trend into that, but there's a financial aspect as well as driving the investment. And a quick note on the corporate finance. So we saw 4 so far in Canadian market, but we start to see some sustainability link loan to large public companies. So what it is, it's that these large public company, you know, when they're getting loans from their bank syndicates, you know, their credit facility, including some predetermined sustainability performance target to reach. So they're going to pay more or less with respect to how they are performing into that. So there's a few in Europe, there's a few in the United States. So it's just a beginning, but it shows the trend, a strong trend in the market, in both banking, investment, corporate finance. So we can imagine that you know, what the next step is going to be into that sustainability, ESG stuff. So I think it's going to be evolving for sure. So we're going to have more clarity, I guess, on the S and the G part in the coming months and years. But it will evolve for sure. So we think it's not the flavor of the month, obviously, or the flavor of the year. Dominique was talking about the the carbon tax. So we foresee that the carbon exchange will become a commodity very soon. So we have that on our radar. And as for agriculture and agri-food, you know, when it's time to talk about sustainability and the ESG, has not been a lot on the radar on the financial market, I would say. So it's more business industries related to you know, energy, so electricity, utilities, and oil and gas, energy infrastructure, and financial world as well. So, but what we believe, as per our study, that there's other sectors, other industries that they're gonna become hot, you know, with respect to ESG. So the 3 ones we think that they're going to be the next one is the mining industry, the industrial sectors, and agriculture industry. So and I conclude on that topic. But I believe that as an industry, agri-food and agriculture, we should be proactive with respect to that in order to be rather than be reactive. And in Canada, you know, we got a great story to tell to the customer, to tell to the other country, to tell to everyone about the E of the ESG. So we're pretty, I think a track record is pretty good on that point. So there's still some work to do, but you know, when we're making comparisons, we're not burning to the ground forest to seed some plants, or we're not drying down the water ground. So there's a lot of regulation around environment, water protection, well-being of livestock, etc. So I think we should be a bit more proactive as an industry on. I know there's some debate, you know, in the science environment around, you know, methane produced by the cows and stuff like that. But the big picture, I think, you know, in Canada, we're in good position into that. So when it's time to sustainability, so I think we should market and communicate that a bit more. So I'll turn it back to you, Rory, and we'll be pleased to take any questions or add any more comments.
Okay, merci. Thank you, Patrick. Very helpful and rather optimistic, I suppose, when you indicate what your clients are saying about investment intentions and hiring and so on. Let's now finally go to Regina. I think that's where Michael is today. Michael Hofford, Farm Credit Canada. Please go ahead.
Yeah, thanks, Rory. Real pleasure to be here. Bonjour tout le monde. It's been a great discussion so far, and I'll try and add to it so that we can get into the question and answer period and add some value. So from Farm Credit Canada's perspective, you know, just to lay some basic knowledge, our organization serves only the Canadian agriculture and food sector, so think farm to fork. Our asset base is around $40 billion. 100,000 customers from coast to coast, and we operate out of slightly under 100 offices. And the agribusiness and agri-food side of our business is really our fastest growing area of our organization. It represents about 15% of our portfolio. We've recently stood up a national structure to support that, recognizing what was coming and what we're trying to accomplish as a country. So we've got a corporate and commercial team that's located with qualified staff that are out serving food processors and you know, agribusiness and food business organizations. And so, you know, we to give you a bit of insights, and some of my story is going to be pretty consistent with Patrick's actually, is we do see a lot of activity in this marketplace. In the past 9 months, we've added over 400 customers. So a lot of those are going to be small, medium-sized customers. There are some, you know, what would be by Canadian standards, some larger in that, you know, a handful of larger organizations, but really small, medium. Primarily those customers would have not only FCC is one of their banks that they deal with, or an FI, but other FIs, could be a credit union, could be a group of other banks. So there's an active market participation in this space. And we're seeing a lot of, you know, it's kind of nuts to bolts in terms of what's happening. We're seeing new facilities, so greenfield projects getting done, seeing some expansions, seeing some enhancements, whether it's packing lines, you know, could be to solidify some of those logistical supply chains with new, you know, freezer capacities, transportation, you name it. We're really seeing a lot of investment and a lot of a desire, I think, to forward think around automation and to solve some of the challenges that organizations face in that side as well. And so we are, you know, really pleased with the performance of our book as well. It was, you know, just a short note on the COVID implications. The one thing, there was a difference for sure in how quickly, in a lot of ways, our primary producers were impacted by some of the COVID disruptions versus what we did see in our agribusiness and agri-food processors. Those ag food processor companies, you know, they were impacted quite quickly, and I think took action to you know, make sure that they had adjustments to their credit facilities, what was going to be necessary to maybe make sure they had their cash management, you know, really tuned up. And we have seen some of that as we've got farther into the COVID experience kind of moderate. And for sure, our portfolio is very strong, and seeing, you know, those organizations that ask for maybe even some payment relief, you know, primarily switching back to their normal payment cycles and moving forward. So some good news there. From an FCC perspective, we are, you know, we do a lot of senior debt, and when I mentioned that part of our organization is growing, the other side is we are looking to support the ecosystem, the venture capital ecosystem for ag food, ag tech companies in our country. And because really, when you look and compare to what was available for other sectors, say technology or maybe some other areas of the economy, I would say that ag tech, ag food side would have been lagging behind. And really, we have seen some venture capital funds look to go down more deliberately in this space. We're one of their limited partners. We've added 4 new funds to our family of funds that we've invested in the last 12 months, over $150 million commitment. And we're talking to others funds as well. We've got quite a pipeline that we're investigating, you know, fit and making sure there's a good focus on that Canadian ag food, ag tech space. With an idea of continuing to grow with the ecosystem. Our goal is to, you know, where we can put in some money, if that can attract some other investment, the Canadian venture capital ecosystem, we think that's value, and we still think there's more need there, more companies than chasing deals and maybe, you know, funding that's available. So it's an area for us to definitely grow out. The other side is, again, looking to advance and through partnerships to grow out our accelerator, our incubator space for those newer organizations, taking some of that new technology, those new ideas, and bringing them to life and commercializing those companies. And so in some ways you need dollars for sure. In other ways, actually, the advice, the connections, some of those experiences you can draw upon. Really, the accelerators and incubators do a nice job of that. So we're working with BioEnterprise, SVG Ventures, an organization based out of Silicon Valley, out of the San Francisco area, recently is set up shop and ran the Thrive Canadian Challenge for the first time to, again, fund Canadian companies, as well as Creative Destructive Labs is expanding into the egg and food space as well. And again, we're looking to see if we can do more on that side of sponsorships to, and again, kind of build out that ecosystem for our egg food enterprises that are out there. In terms of the sustainability side, FCC for sure is like every organization that would be there in terms of sort of having those basics in place. So if you're going to deal with our organization, you're going to, go through an onboarding process that includes an integrity declaration that really outlines our expectations, whether it's environmental stewardship, how we manage land, water, air, animal care standards, how are you going to manage your labor and expectations around that, as well as adherence to law. And those are very, as I say, very table stakes based, and what we find generally is that our expectations are exceeded by almost every one of our customers, and where there's challenges, we're able to to rectify those quite quickly and work together. From the ESG perspective, we'd be most active in the S part of that. So if you think of environmental, social governance, a lot of our expectations so far, our efforts have been in that social side of things. It's part of our mandate as well. Young farmers, young entrepreneurs, we've got some special loan programs there to stimulate their entry into the business. And it's an active business, actually. We're between $3.5–4 billion of new loans to young entrepreneurs, young farmers on an annual basis. So very, and we'd categorize that as folks under 40. So which would be, kind of the agriculture and food reality on that side. But as I say, a really nice renaissance in terms of young entrepreneurs, men and women looking to get into the food business. We've run a special program with underrepresented groups as well. So Women Entrepreneur Loan. It's interesting, it's been launched for a little under 2 years, and we've already had more than 1,900 women entrepreneurs take advantage of that loan, and the dollars are around $1.2 billion. So very active space, some net new women entrepreneurs that have come forward that we're dealing with, and some exciting projects that have taken place there. And then we'll do, one of our things around lending is also knowledge. So making connections for people to kind of connect with other people that are in their space that they can learn from together as they grow their businesses, looking at some advisory offers that are, again, targeted to our areas of expertise where we think we can add some value. And then the one last shout out I would put in this space is just really a growing relationship with Indigenous peoples across Canada that are looking to be involved in the agriculture and food space, from a food security perspective, food sovereignty, advancement of some of the traditional food production that would have taken place across Canada, and also a very strong emphasis on economic development opportunities for Indigenous people. So very excited on what's been started there and what's possible in the future. So as Patrick said, a lot of growing expectations in ESG space, whether it's coming from institutional investors, some of the food processors. It was mentioned early on in the conversation by Bill in terms of talking to some of the buyers that are wondering about where their ingredients are coming from and are they sustainably obtained, from restaurants and consumers. All of that's kind of adding up, I think, to send signals to us in terms of the opportunity that is there, because as the dollars flow there, and you think institutional money, and there was recently an article about BlackRock's commitment to looking at carbon footprints, net zero, how that would impact organizations that they invest in. It does give us some pause, I think, as an industry to say, okay, we have a good story to tell. We've got an opportunity here to connect some dots and to be one of those landing spots that can, kind of contribute some of that capital that we need in our system to be able to really, kind of take advantage and live into our full potential. And so, I would end with just kind of to maybe put some context around the challenge that Bill talked about. And it relates to this accessibility of capital, and really, I would say, almost the scaling riddle that organizations run into. So as you go from small to medium to large, there, in a lot of ways, there seems to be these pivot points where you get to a certain level and you plateau for a bit, and then the next jump takes a pretty significant investment, and the next jump takes another investment. So as you go each of those things, you know, we run into it with our customer base, and you know, with some of the challenges will be labor, accessing labor. You know, we've got a labor challenge. Food and Beverage Canada would, I think, put the number around 25,000 roles that would be underfilled or unfilled that we could, you know, we have access that we'd like to have more labor. And so that can be a challenge. We see scaling in terms of, you know, managerial and leadership, and just being able to kind of evolve your leadership team that's around you as a organization to really go into these increasingly larger and more complex kind of business units and operating systems. And then, as Bill said, you know, to open the access to capital. And so, you know, an organization like ours, where we run into that, will be, you know, there's only so many options when you're going to do a major scale, and so it's a really important, I think, policy area for us to explore on what's possible and how are we going to address it. So there's a lot of times, you know, one of the options is debt capital, and to 100% finance a major expansion on a newer, rapidly growing organization can often be difficult. You know, there's leverage can be your friend for sure, and there's still going to be limitations in terms of balance sheets that make that, you know, not always works, especially if you're, as I say, in that newer, rapidly growing phase, where just, you know, your balance sheet gets out of, you know, it gets difficult, and the risk, you know, profile just gets difficult for banks to fully fund, just to be quite open. So then, oftentimes, then you turn to what are our options? Well, let's take in some equity and some venture capital or private equity. And then, you know, the challenge of that a lot of organizations run into is just how do you value that piece of your company that you're gonna put at, you know, up, or that ownership you're going to give up in terms of for that capital exchange. And a lot of questions around what is the right EBITDA multiplier? Are we talking about the EBITDA today or the EBITDA that we're going to grow into? And just how do we kind of arrange for, you know, an equitable way to have that capital come into place on an agreeable, when there's often very unique organizations or a lack of what I would call comparables to say what's proper for us to kind of do a deal. You know, often our multipliers aren't going to be Silicon Valley type, but you know, what does that look like, and how can we facilitate some of that? And then the other, you know, the other concept, and some organizations would do this, would just be a patient approach to, you know, building up retained earnings and kind of doing it in very staged development. You know, that can be effective, and I think we see that in particularly maybe more in primary production and some of the other organizations we deal with. But it can also take too long, and there can be missed opportunities and lost operational efficiencies that can be, you know, by a more significant step or a more significant upgrade of a plant. And so, you know, it's one of those areas of discussion, I would say, for today, is just what are the opportunities, whether it's, you know, is there a tax policy or a government program? Is there a chance to have more facilitators to be able to kind of find those agreeable or places where you can draw in some of that capital, you know, from an investment perspective or an equity perspective, and facilitate some of the negotiations more effectively to have that flow in, you know, and in a successful way. And how do organizations like ours need to lean in, along with our financial partners like Patrick's, to be part of that solution? So, you know, I think there's we have you know, we've got a great base to build from. I think we've got a lot of the natural things we need to be able to move forward and really play a much bigger role in the agri-food, you know, space for our own consumption, but also for our exports. And you know, it's just how do we kind of make sure that we grow into our full potential, and I think that's a worthy conversation for all of us in our sector. And I'll turn it back to you.
Okay, thank you so much, Michael, and all the panelists. Really important and diverse perspectives on this issue. So we've got a few questions have come in. I'm going to scan through them, but I will get things going with a question that links to this basic issue of environmental sustainability, particularly carbon management and climate change, risk versus opportunity. And I'm curious to know how people are weighing that. I've heard some concern from Dominique from Roquette about risk to carbon pricing and CO2 tax in Canada, but I'm hearing also a trend. I'm looking at thinking from policy terms, a new US administration that's instantly signaling its intent to turn carbon management into an important new revenue stream for the agriculture sector in the United States. I'm looking at guys like Jeff Bezos, who's just retiring and who's got this multi-billion-dollar Earth Fund. And you talk about, Michael, how big are the bets, or is it going to be incremental? I think a guy like Jeff Bezos doesn't do things incrementally. He's probably going to put some big bets into some big initiatives. And the question could be, is Canada going to be on the radar in this new environment in terms of the opportunity? So what do folks think? Maybe I can first turn to Dominique. When you talk, Dominique, about the concern of carbon tax and cost that could create, is it as simple as that? Is there also, though, a positive in your point of view? You mentioned, doing peat processing in Manitoba, where you're drawing on exclusively hydroelectric power. So you're a very sustainable source of plant protein in that sense. Is there a financial opportunity in your product attributes and the pricing, or even in your ability perhaps to generate offset credits that could be sold? Is Roquette looking at anything like that?
Well, first, I mean, we're trying to understand the legislation, because it's not easy to navigate the CO2 tax component here in Canada, and then the province has different topics. Now, for sure, sustainability is very important for us, and that's why we're in the pea protein business, because peas are actually very interesting for the farmers, because the peas are putting nitrogen back in the soil, which means they don't have to use so much fertilizer. So there are a lot of benefits to the climate and to the environment, which needs to be taken into consideration with the CO2 tax. Also, we are a new industry, there is no other plant like this in Canada. So having standards and a benchmark, I mean, we are the benchmark. But once you are the benchmark, it's somewhat difficult to go through the process and the CO2 tax. Now, what can be the drawback for industries in Canada, not talking just about Roquette, is that the competition is outside Canada, and is in some areas where there is no CO2 tax. And I mentioned in North America, the US, and our competitors are in the US, and then also China, competitors are in China. In Europe, there are CO2 taxes, and the system is very clear. And we are working on, improving our energy efficiencies, because at the end, we want to make sustainable pea protein and other products. So we need to be energy efficient. And we invested also in Canada, in Portage, very efficient equipment with recycling of water, recycling of steam, recycling of waste. So to be the most efficient as possible.
Great, thank you for that. And maybe I'll ask Bill. You're not a panelist, but I do want to ask you a question on this topic. I mean, you're at the supercluster. You are looking at applications for all kinds of investments around plant protein. How does the sustainability or the opportunity to generate revenue from carbon sequestration or anything related to energy efficiency, how is that coming into play in the applications that you are seeing? And are you leaning into some risk in terms of underwriting the costs of those investments amongst the client group that you're working with?
Yeah, Rory, I would say we are, and I'd maybe make two comments. One is, top level concern for the companies we're working with is this concept of environmental sustainability. So really thinking about it in terms of the innovation that they're trying to create and support and fund. So a top line objective is sustainability. The other thing I would say is that I think it's around 75% of the projects we've funded today, and that's a project portfolio bank of around $330 million, have environmental sustainability benefits, either from reduced energy consumption, the crops that we're supporting, in terms of reducing maybe input requirements. So factoring in very high, I think it's something we're looking at in terms of a funding criteria as well. So of course, our top line is return on investment and the commercialization strategy, but we're certainly considering the environmental benefits of projects, yeah.
Okay, excellent. And okay, well, look, let's got some questions, and let me go for the first one here. And maybe John Kelly, I'll put you on notice because you're the government guy, so you have to explain and defend interprovincial regulatory differences and trade issues. You get the short end of the straw here. But the question is, as was highlighted by Dominique, there's a real issue that they faced on this. I think also I can tell you when you talk about that whole issue of carbon pricing and offsets, the standards for offsets, all of that issue of regulating climate change and the standards, yeah, there's a whole new emerging area of new interprovincial discontinuity that's could compromise investment. But the question is, you know, are there solutions in play? Is there anything emerging in the present policy environment to start to do better in this space as it relates to agriculture? And partly that question of international alignment comes in because as Dominique said, it's a bit you know, quite different in Europe. And if we're trying to get investment, we need standardization that's not just consistent internally in Canada, but also better aligned internationally. John, do you have any comments on that?
So with regards to interprovincial trade, I think the Ontario government is really trying hard to reduce barriers. And if you look at what's happened, particularly over the past year with COVID, it's really shone a light on some of the challenges that are happening with interprovincial trade. You know, COVID has caused challenges in some of our meat processing facilities, for example, where you have workers who come down with the virus, and then you get slowdowns in production, or in one or two cases, complete closures for periods of time. So we have to be able to adjust to those new realities, and certainly things like the movement of pork in Ontario, maybe some Ontario pork going to Quebec facilities, really helps us, and it helps everybody actually. So one of the things that we have to look forward is more cooperation across the governmental sphere, if you will. You know, we've got rules that you know, prevent the trade of different alcohols across Canada, right? And I know our ministry and our government is focused on trying to reduce these barriers to trade. When it comes to you know, specific legislation, we have an open for business legislation, which is run through our Ministry of Economic Development, Jobs and Jobs Creation and Trade. And its focus is on creating those opportunities for new businesses to come in. And one of the things is addressing that trade part. On the international side, looking at our agreement with the US, whether it's through the USMCA or through you know, the Tri-National Accord that we participate in, or looking at the various virtual trade missions that occur, and that's the way all the way these are going. That's a big part of what the direction is. We also have the Canadian Free Trade Agreement, where there's a regulatory reconciliation and cooperation table, and the idea is to bring forward regulatory barriers to interprovincial trade, and it is tied to, you know, federally and provincially inspected facilities, that type of thing. So we know that there are interests in working with CFIA. So we do have to work with our federal partners to address some of these issues. And I think we do have an opportunity with the next policy framework. We are in the Canadian Agricultural Partnerships 1, if you will, now. But the next agricultural policy framework will be discussed, and you know, those discussions are going to start this year, right? So, and I know that will be on the agenda to move things forward.
Great. Okay, thank you, John. Okay, let's do a couple more. Let's go more into the financial side. Great question here from Murray McLaughlin. We heard that wonderful phrase, Manitoba has the potential to be the Silicon Valley of plant protein. So Silicon Valley in California, of course, has grown, Murray points out, based on the risk appetite of venture capitalists and angel investors. And so how do we manage this in Canada? I know maybe Michael Hoffert, you want to start. I mean, I know FCC has a venture capital type fund, but do we have the ecosystem of venture capitalists in this country to really drive this agenda? Or how are we going to tap into the international venture capital scene to get the capital into the sustainability investments that we're talking about?
Yeah, no, thanks, Roy. And it's a great question. You know, in terms of what we've seen, if I go back more historically, when Farm Credit Canada first got involved in venture capital finance, we ran our own internal fund. And then, you know, we saw that there was limitations in our ability to attract others to want to invest because it was an in-house opportunity. And so we shifted out into the ecosystem and started to look on where, you know, how would we maybe be a limited partner in a different type of fund. And essentially, you know, really found only one opportunity to get going with it, and that was you know, this is 15 plus years ago. And then when I fast forward to now, when we look at it, as I said, in the last you know, 12 months, we've already done 3. I know we're in final negotiations with a couple of others, and I talked to my team that's responsible for this, and our pipeline is very full. And so what's different about it is some of these funds that were and fund managers that were investing in Canada before, they weren't really looking at the ag and food space. They're shifting and they're looking at the ag and food space in this opportunity. So they can recognize that this is going to be a growing area of our economy, that it does lines up well, I would suggest, with, you know, our sustainability and you know, carbon objectives and things that people are looking at when they do make investments, which I think can be positive. And the other thing that we're seeing is actually there is a shift, and most of this that I've would be kind of US-based funds that are broadening their focus to not only be you know, down in the States, but are looking up into Canada and where they can participate. And when they approach us, like they're willing to make firm commitments on the level of investment that they would drive into the Canadian ecosystem. So they're seeing enough opportunity that they're contractually willing to look at how that would look and feel, and which would be, you know, and maybe make those an attractive place where FCC could stimulate a bit more of that by making arrangements. So I do think we've been underdeveloped, absolutely. And it can feel a little bit slow in terms of what's happening, but when I look at some of the interest that's coming in now, it does. I think, you know, timing's everything, and I think we're going to hit the timing now where we're going to see a greater availability of capital. Once there's a bit more funding available, I think then the risk appetite shifts a little bit more moderate, and you'll find that there'll be people filling into the different segments, whether it's, you know, earlier stage to more commercialization companies and beyond, and that'll be helpful too, because there's you know, you can have a enriched ecosystem here and still miss some of the key pivot points in terms of where you go from, you know, that research table into, you know, your first pilot plant to then more commercialization organization. So I'm confident it's coming, and one of the roles we think we can play is to help stimulate that along.
Great, thanks, Michael. So pushing a bit further into this question of attracting investment capital, a good question from Angela Chen around this. We talked about that issue of you know, institutional investors, pension plans, BlackRock, you mentioned, Michael, showing an interest. And I know from Maple Leaf, we got a new credit facility from BMO that included sustainability provisions that gave us a bit of an interest rate break. So there's real activity in that space. Question for you, Patrick, at Banque Nationale. You mentioned that, I think, evidence that that companies that are invested in ESG perform better. Their economic performance, their profitability growth seems to be better. Can you talk about that? I guess the question is that kind of analysis publicly available so that we can start to see actually how the two do correlate? Can you talk about that?
Yeah, so I'll look what we can disclose. It was an internal thematic research that we we did with respect to that. So first point on that, it was more focused on the performance on the stock market, obviously, because it's very large public traded companies when it comes to investment banking. So this is what I was referring to. So I'll look if we can share a bit. We got a kind of a 30 pages document on the ESG, and there's a couple aspects on the investment and some trend we see there. But the point with respect to that, what is highlighting, and to me it was a bit of a surprise, because with respect to performance, but when we think about fundamental, how come these companies can perform a bit more? So they are investing into that. So I guess it's depending which sectors they are, but the customers. So I think it shows that customers are more and more concerned by that, more and more sensitive to the investment and the goals that companies are making with respect to the ESG. So that bringing some kind of traction to me, but it's very preliminary. As I said, it's a brand new world. We start to discover in both investment banking and on the lender side, etc. So there's a lot of things to build. But this, when we make comparison, on the large company on the financial market investment side, they are performing a bit better. So look, if I got the numbers here, I think it's 2 or 3% delta of increase in the performance.
Great, thank you. We'll just wrap up here pretty shortly, but let's go to at least one final question. Gord Bacon from Pulse Canada's got a good question, and this resonates. Of course, CAPI is a policy think tank, so we like to think about the big policy issues. And Gordon's got a good question here. He points out that 2021 is the year of the UN Food Systems Summit. And I know, in fact, there's consultations underway now by the government to prepare Canada's involvement in that. And some are suggesting that this summit could have an impact on the food system similar to the kind of impact that the Paris Climate Change Agreement has or will continue to have. So the question is, are we kind of at a global pivot point in terms of the sustainability focus around food systems, and are we in for some major change? The one thing I'll comment, there's lots of evidence that despite the economic damage of COVID and everything, there's a lot of indicators, and of course that's signaled by the new US administration, that nobody's backing down. In fact, there could be almost a doubling up of commitment to action on climate, and a lot of focus on the food system. So the question is really for any of the panel members, and Ted Billier, you may want to jump in too. What do you see coming out of this summit, and what are the implications for Canada? Does anybody have a feeling for that global context as you follow the media and so on? And Ted, jump in if you want to give a comment, but I'm open to anybody's point of view.
Well, Rory, I can just add that CAPI's been asked by Agnes Kalibata, who is the head of that summit, to work with the Canadian government on exactly the question you're indicating, or that Gordon's asking. And from a CAPI point of view, we think it's a real opportunity to focus on what we've been talking about for some time, but it's really a question of how do you produce more and better with less. So that's our fundamental grand challenge. And if we can do that in one health environment, one health context, then I think that's the jackpot. So we're going to be spending a lot of resources this year working on that exact question, and hopefully with everybody that can contribute.
Excellent. And I would add, certainly from my point of view, there is business upside to this scenario if we get our act together, based on all the natural advantages Canada has in its ecosystems and its natural capital, and also just the smarts and skills and experience that we have in the sector. Okay.
So, Rory,
yep.
do you want?
Yes, John, please go ahead.
I was just going to echo some of the things you were saying, because this summit is to bring, you know, science, business, policy people, healthcare, environmental activists, farmers, indigenous groups. It's meant to be all encompassing. And I think we do a pretty good job in Canada in terms of our sustainability direction. We can always improve, right? And that's what we will bring. This will likely be driven by the federal government, but we will watch it for sure, and we'll look to be included in what happens. But one of the things that COVID has really shone a light on again is the resiliency of our sector, right? So as we move forward, I think meeting those, I think there's 17 sustainability development goals that the UN has. That'll be the focus of what's going on in this this summit. It'll give us an opportunity to be leaders in the global forum, and we should be able to shape some of the way these things go. And Rory, I think you said it appropriately. We do have the smarts and the academic strength and the policy strength as well as the business strength to move this way. Just look at the investments that the Protein Innovations Canada has made in what they're doing. They do it very programmatically and directionally. So it's all good.
Great. Thanks, John. So folks, we're approaching the end of our session. I really appreciate this. We've had some great dialogue and discussion here, and several questions we couldn't get to, but we appreciate those. So I'd like to now turn it over to conclude to Tyler McCann, who is Chief Engagement Officer for CAPI. Tyler?
Thank you, Rory. Merci à tous de nous joindre ici aujourd'hui. J'espère que vous avez apprécié les présentations et le dialogue que j'ai trouvé très pertinent et intéressant. I want to thank our panelists and our moderator for their valuable insights. And I would like to also thank our sponsor for today's webinar, Protein Industries Canada. Thank you very much, everyone. CAPI has more webinars and research, so please join our mailing list and follow us on social media to stay in the know on the upcoming research and events. Our next webinars, titled More and Better with Less, Sustainable Intensification in Agriculture, will take place on March 2nd and 5th, a two-day webinar series focusing on the importance of sustainable intensification for global food security and for addressing climate change. Again, as was just talked about, these webinars will touch on topics that are very important to the local, national, and international dialogues that are going on today. The work that the Canadian Agri-Food Policy Institute undertakes is possible because of funders like the Government of Canada and others who believe in advancing the agri-food and agriculture sector. There are many different ways to support the work of CAPI, as you can see on the screen, and we are actively seeking funding partners as we work going forward. Please reach out to explore that different funding opportunities that exist through the info email located at the bottom right of the screen. We look forward to connecting with you in the future. Thank you again for joining us today, and we look forward to seeing you on March 2nd and 5th.